Hi you guys, welcome back to Progressive Sistas MAGIC, and today we're going to be going over lesson 5, the trading psychology inside of crypto. So lesson 4, I went over the fundamental analysis of trading crypto, which is basically the technicals and things like that. And today we're going to be going over the psychology of crypto, which is all about what's in your brain, your thoughts. So let's go ahead and hop into the first paragraph of our lesson. Why trading psychology matters. In professional trading, people often say trading is 10% strategy and 90% psychology. This means even if you have the best technical tools, charts, or strategies, if your emotions control you, you'll make poor decisions. Crypto markets are extra emotional. Because of high volatility, prices can pump or dump 20 to 50% in hours, leading to panic or euphoria. Example, in stock markets, Warren Buffett became famous not because he had the secret indicators, but because he mastered patience and discipline, buying when others were fearful and holding when others were greedy. So we currently have the saying that 90% of trading is psychology and 10% is going to be with the actual charts, the actual fundamental part. Now, there's another famous saying in the crypto world where it says that only the 1% survive. So that means that out of the 100% of people who attempt to become day traders, only 1% of those people actually become profitable everyday day traders, okay? So they have different stages on when these traders fall off. You have the first stage is when they're seeing that they're not making profits fast enough. They're realizing that crypto markets is not a get rich quick scheme. Now, there have been some cases and scenarios where people have had pumps overnight and they get super rich and they pull out all their money, but that for the most part is not how the crypto market works, okay? It takes time, it takes dedication, it takes discipline, it takes understanding, it takes so much of your mental to be able to be a profitable, really good trader. Another stage that I've seen when traders fall off is when they have a really good streak. Let's say they made 4 good trades, then they make 1 really bad trade, and then they're like, you know what? I don't want to do this anymore. I lost too much money. I don't want to do this anymore. And I think that is a huge mistake because 1, you shouldn't be leveraging any money that you can't lose. So my best advice to you guys, my most honest advice to you guys, people always ask me, how much money should I start off with in my trading account? I have $500 or I have $5,000 and da-da-da-da. You put into your trading account what you're comfortable with never seeing again. Okay, that is what I tell everybody. So if you're comfortable with never seeing $500 again, go ahead and put it in. But if you lost $500 right now at this moment, if you couldn't pull it out and you were never able to get it again, would you be okay? Would all your bills still be paid? Would you still be able to have food on your plate? Now, if you answered no to any of those questions, you shouldn't be putting that much money inside of your trading account. Only be comfortable with putting in what you're comfortable with losing, because trading, you're going to have some losses. The best traders in the entire world have some losses. Warren Buffett, the greatest financial investor of all time, has had losses, okay, you guys, major millions dollars losses. So you just have to understand that is what comes with trading. And something that I also tell all my people is that just because you lost a trade doesn't make you a loser, okay? Don't think like, oh my gosh, I'm so horrible at trading because you've had multiple bad trades in a row, or maybe because you still have been unprofitable for over a year or something. Being profitable takes time and dedication. You have to put the work, the time, the energy into molding yourself into a trader. So if that seems like it would be something that's too hard for you to do, to really hone in on those characteristics to be a great trader, then maybe trading isn't for you. Maybe you're just an investor, okay? And that is okay. Trading isn't for everybody. As you can see, 99% of people who attempt to become professional day traders don't do it. It's not because they're not smart enough or anything like that. It's because of the psychology behind it, okay? The dedication and discipline that it takes to be a full-time day trader. So now let's go over the top 5 trading psychology traps in the crypto world. And you guys, this can be applied to any financial market, crypto, stocks, futures, currencies, anything, because at the end of the day, all trading literally needs the same exact understanding of charts and the same mindset, the same psychology. FOMO, fear of missing out, happens when you see a coin pumping fast and you rush to buy without analysis. Most FOMO buyers enter at the top and then panic sell when price corrects. Example, many people bought Bitcoin in late 2017 near 20,000 due to FOMO, only to watch it fall to 3K in 2018. So you guys, what I'm going to be doing for each crypto trap that they have, psychology trap that they have, I'm going to be giving a real life example from myself that I've experienced as a professional day trader, okay? Because I believe that every single day trader has to go through the stage of really working on themselves and working on their discipline and their mindset to be able to get to where they are now. So let's talk about FOMO. This actually recently happened to me, you guys. So, you know, everything that's going on geopolitically, it's a lot going on, especially as in regards to oil. So my mom actually sent me this coin, this USOR. So it's essentially it's US oil reserve is what it stands for. And she's like, this coin has been going up. I've already made $11 in like 2 minutes and and I only spent $3. And she's like, you need to buy it right now, buy it right now. So I'm just like, and this is early in the morning. So I just wake up and I just buy the token, you know, I buy $20 worth. But then I'm looking at my $20 and it's going to $19 and it's going to 18, then it's going to like 13. So I'm losing money like really fast. And I'm like, Mom, I'm not gonna put any more money into this coin because I didn't even have a chance to research it. I said, I just bought it because you were like so excited about it and I didn't even get to research it. She's like, oh, I put a lot of money in there. So I said, before I put another dime in here, I'm gonna look it up. You guys, why did I look up USOR, okay, which stands for United States Oil Reserve, which sounds very legit. It's actually not legit at all. There are no ties proving that it is connected to any US oil reserves. It was actually in the news. Then on top of that, they paid a whole bunch of TikTok influencers to be able to pump up this coin and literally like create FOMO about this coin just so they could rug pull it. They've already rug pulled it. And they're gonna do it again because everybody just wants to invest inside of oil stocks and cryptocurrencies and all that. Now let's go over the second reason, which is going to be panic selling. Fear, panic selling. When prices crash, traders sell out of fear, often at the bottom. Example, during COVID-19 market crash in March 2020, many sold Bitcoin at $4,000 out of fear, but professionals hold or even bought more Bitcoin later and it went above $60,000. Now, I feel like this is probably the most common reason, the most common trap that day traders fall into when it comes to crypto is panic selling, okay? Because the crypto market is so volatile, the price moves in one direction so quickly without like any indicators really sometimes. And you fear, you get into really a moment of fear and you sell it, okay? You have to know and analyze when is a good time to hold and when is a good time to sell, okay? Sometimes it's not always sell high, buy low. Sometimes it's actually hold it, okay? Sometimes it's actually hold it. And you have to be able to analyze the charts and the macroeconomic effects that's happening in the market to make a sound decision on what you want to do. So I've actually never panic sold any cryptocurrencies, never, because I have a really good understanding of how the crypto market works. So I cannot say that I have an example of panic selling within the crypto market, but I do have a really good example of panic selling within the stock market. Okay, guys, so when I first started trading, I was not using stop losses, okay? So I would literally sit there at the screen and I would stare at it and I would make sure that like it doesn't fall anywhere below where I want to get out of the trade at, right? I don't personally recommend this, but again, every trader is different. It did not work out in my favor all the time. Sometimes I had really big wins, but then at times I had really big losses. And one time I saw the option price of an Nvidia stock going down too low to where I was like, I don't like that. And as soon as I sold it, you guys, I panicked and I sold it for a loss. Why did it immediately jump back up? Because of some news that came out about their earnings. Immediately, like literally, I can't even make this up. Now let's go into the third trap, which is going to be over trading, over leveraging, which is going to all equal up to greed. Greed, over trading and over leveraging. Trying to maximize profits with high leverage or too many trades. Example, a trader doubles their account and gets greedy, opens a 50x leverage position and loses everything in one move. You guys, this goes back to what I was talking about earlier. You have those really good 3 trades, those profitable trades, and then you're like, I can do this, which you can, okay, but in a smart way. But you're like, I can do this, and then you leverage basically 100% or 50% of your account and you lose it all in that one trade because you're overconfident. It's okay to have confidence, you guys, but there is a fine line between confidence and greed. Okay, sometimes what you be thinking is confidence, it's actually you being greedy. Okay, and you not actually analyzing things, you just kind of like using your confidence as like a way for you to get more money. Rule of thumb, you guys, you're never supposed to leverage more than 10% of your account. Okay, that is a rule in trading. So if you lost that trade, you're only losing 10% of your account, so you have another 90% to play with. But when you over leverage and you're leveraging 50% of your account and you lose it, you're left with only 50% of your money. Okay, you guys, and that comes from being greedy and not having proper risk management, and that comes from not having proper discipline, which is all a part of the psychology of trading. Now let's go into the next one, which is going to be overconfidence and over trading. Overconfidence / revenge trading. After a few successful trades, some traders think they can't lose. They start taking bigger risk. Example, a trader makes 3 winning trades, then risk all in one bet. If this fails, they lose months of work in minutes. All right, so let's go over the concept of revenge trading. We've already went over overconfidence, but when it comes to revenge trading, you guys, it's literally you thinking you're getting revenge on the market, okay? So if you have a trade that didn't go your way or went against you, you're trading just to combat that trade that you just lost, essentially. Not because of an analysis or because you think it's a really good setup or anything like that. No, it's simply because you lost a trade and you want to get that money back that you lost. That is one of the quickest ways to blow your account. That's actually how I blew my account the first time. I've actually blown my account twice. It happens. And that is the result of not having enough discipline. I mean, that's the easiest way to put it. And then also on top of that, having me being swayed by my emotions. I let the market sway me, okay? You are never supposed to be swayed by your emotions when it comes to trading. You're supposed to take it out, okay? Because the market has enough emotions for you already. You don't need to add your own, honestly. So that's when the psychology of trading really, really takes a step in and makes you really evaluate yourself and your choices and be like, oh, I need to work on that. Now, speaking on discipline again, let's talk about the 5th crypto trap there is, and that is impatience / not having discipline. Impatience and lack of discipline. Professional traders follow a plan. New traders jump in and out without strategy. Example, if you plan to buy Ethereum at 2,000 but got impatient and entered at 2,200, a small dip could take you out. I want one trader to come to me and say that they have never had a problem with impatience or not having enough discipline when they started trading. I want one trader to do it, and I promise I will give you your props, because I couldn't tell you one trader who didn't have this problem. I mean, impatience, you know, when you get, especially nowadays, people make it seem like crypto markets or just any financial market is like a get rich quick scheme. Especially crypto, because it has happened to some people, but on such rare occasions, okay, you guys? And that's where we have this misleading concept of you being able to make money very fast, okay? And so that leads to impatience in one aspect of you not making money fast enough, so you're upset and you're impatient. And then another way of you not seeing your price get to where you want to, but you know you're going to make money, so you're going to hop in wherever you want, not even actually following your strategy and your plan that you went through, you know? And that is how you lose money, and that is a clear sign of a lack of discipline. Now, when it comes to discipline, the number one thing a trader is going to need to better their discipline is a trading journal, okay, you guys? I know that's not in here, but I want to tell you guys to get a trading journal where you document your trades, every single trade that you do, even if it's on a demo or paper account, okay, you guys? You need to write it down. Write how much you leverage. Write how you went into the trade. Why did you go into the trade? What strategy were you using? What news did you look at? Did you have a TP set? Did you have a SL, a stop loss set? And what was the result of this trade as well? You need to write it down so you can see where you go wrong in every single trade, or you can see where you go right in every single trade. And when you have a documented proof of your progress that you've been making as a trader, it's going to make you feel so good, and it's going to make you want to be even more disciplined, you guys. So take my word for it, get a trading journal. And literally, you don't have to go out and buy a trading journal. Just get a journal, a notebook, and write down your trades every single day. Now let's go over the key takeaways from this lesson. Key takeaways for a strong trading psychology. Have a plan before entering a trade. An entry, stop loss, and target. Detach emotions from money. Treat trades as probabilities, not guarantees. Accept losses as part of the game. Even the best traders lose trades. Control position size, so one bad trade doesn't wipe you out. Think long term. Professionals focus on consistency, not quick jackpots. A professional trader doesn't let the market control their emotions, they control themselves. So that basically wraps up everything that I went over in this video, okay, you guys? And I truly believe in you guys. I know it's a 99% of traders that fail and only 1% that make it, but I believe you coming on here, you watching these videos and actually taking the time to learn about the trading psychology that goes behind crypto, I think you'll be part of that 1%. You just have to keep it up and you have to stay consistent, okay? And have faith in yourself, have confidence in yourself, okay, you guys? If you lose a trade, that doesn't make you a loser. And when you really develop and nurture these characteristics that are needed to be a great, profitable, and successful trader, you're going to notice that you are actually changing yourself. You are developing yourself, okay, you guys, your higher self. And when I say that, I mean you're going to start thinking different. You're going to start acting different. I promise you, you're going to start working out. You're going to start eating differently. I'm telling you, you guys, being a full-time dedicated day trader literally shapes you into a completely different person, okay? And if you are willing to go down that road and go with the bumps that come along that road as well, you're going to be part of that 1%. I truly believe in you. So that is going to be all for this episode. And if you haven't already, I want you guys to go and take the quiz that is at the end of this lesson to see what type of trader you are right now. Even if you don't trade, just see the type of psychology that you have right now. And then that gives you a little bit of a path to go on the things that you need to work on, okay? Or maybe you don't need to work on anything, which I highly doubt. Everybody can always become better, okay? So have an open mind when you take this quiz and take it honestly, because at the end of the day, it's for you and only you, for you and your success, okay? So I will see you guys for lesson 6.